we did due diligence. We walked every single unit. So there are 106 units at this property. It is in a Creve core location, as I mentioned. It was built in 1990, but it was completely renovated on the inside in 2023. So this, as we walked in, a lot of times they will present the very best picture, and you walk in thinking that everything's going to be great. And as Laura said, we were delightfully surprised at how the pictures actually supported what the units really look like. So we're super excited. This is a 14.9 million purchase price. We're raising just over $6 million. We will be using that for equity, of course, acquiring the property along with the loan that we're getting. We've got some CapEx expenditures that we have planned. Mostly it's going to be exterior. As I mentioned, most of the interior has been updated. There are a few things here and there. Of course, we have some tenants that have been there 4 or 5 years, some of them even longer. And so those units maybe haven't been updated because they haven't moved out yet. So, we have a few things here and there, but nothing that we can't handle in a normal turnover of a unit. So it's a pretty close mix, 1 bedroom, 2 bedroom apartments, average are 650 square feet. And we are currently sitting at below market rent for this type of a property in this area. As we mentioned, it's a fantastic area. It's probably one of the top 3 in the St. Louis area. Westport is right across the way, and there's a lot of things happening at Westport: comedy club, restaurants, shopping, all that kind of thing is happening just across. It's a great location, sits where 270 meets Page Avenue. And anybody who knows St. Louis, if you say those cross courts, they'll be like, oh yeah, I know right where that is. So our average rent, as I mentioned, below market at 1180, and we are super excited about the fact that there is immediate cash flow at close. So we are excited about this property and what it brings to our investors for sure. So some of the things that we'll do to hit value at the Haven, Laura kind of already talked on some of them, and this is the court that she was referring to. What we're envisioning there is perhaps a dog park or something that people are going to be able to use. You can see there's a little gazebo here down at this end. There is a gazebo where people can, have a picnic table and a grill and that kind of thing. So we definitely have some ideas about what we're going to be able to utilize in order to create value. And keep in mind that that's one of the things that you as an investor want to have happen at this property, right? One of the things I love about multifamily real estate is the fact that it is a math problem, right? It's not like the comps that you get with your residential, because the house on the left of you sold for 300,000, the house on the right sold for 500,000. That must mean that yours in the middle is worth 400,000. I mean, that's kind of how the math goes when you're in residential. But for commercial, it literally is a basis of what your NOI, or your net operating income, is for the property. And net operating income is, simply put, the gross rent revenue minus the expenses minus the debt. Then you come up with your NOI, or the cash distribution that you're able to pay out. So it's a simple math problem. When you figure out how much it's bringing in, then that turns into, along with a cap rate, how much that you're going to be able to pay for the property, what makes sense. And we feel like that this is a very fair price that we're getting based on our, as Laura put it, conservative underwriting, which we rely on Tim Gramling for our conservative underwriting, and he's going to talk to us a little bit about that in just a minute. But this gives you some nice pictures of the in units, solid surface countertops, upgraded appliances. Again, these are all not things that we've just seen in pictures. We've seen them in the units. We know that this is what they look like. All the flooring was replaced in 2023. It was in fantastic shape. And then you see some of the other amenities. There is a fitness center, obviously the pool. And as we mentioned, we will be doing some outside updates, cleaning up some things, removing some bushes and trees that maybe are a little overgrown, just things like that where we can freshen it up, maybe some paint here and there, and then just giving some small amenities. The clubhouse itself has a lot of room that we're going to be able to do some things with. We've tossed around the ideas of expanding the fitness center, maybe giving some conference rooms, or a area where you could have, meetings. Also small areas where you can do homework. There's a lot of students, nurses at this facility because there's medical and school is so close to this. So we've got a lot of options where we're going to be able to upgrade the value. Tim, why don't you talk a little bit about this site plan as where it sits, et cetera?
Yeah, so Craigshire Drive in this area is kind of a dividing line. They're on the other side of the street from this where this property sits. There's some corporate, really nice corporate offices, some a fitness business, a bank, but all around this property and kind of behind it, it kind of is nestled in kind of a little residential area. So it's a very quiet, quaint area. We had when we did our due diligence, we had to have actually had some people stay in a hotel down the street. They were able to walk the neighborhood during the day and at night, and said it was very quiet, very felt very safe the whole time. So very nice location, and you can see the layout of the property here. It's very conveniently located for the residents in terms of it's kind of compact and everything kind of surrounds the courtyard area. Easy access to everything on the site, including the clubhouse, which is where they have a few like a fitness room and a laundry room. So very easy property to live in. Convenient to parking as well. Um,
Absolutely. I think there's probably, isn't there about almost two parking spaces per unit? Is that right, Tim?
oh, I don't remember right off the top
I
of my
think
head,
it's
but I
like,
believe it's pretty
yeah,
close to
like
that.
one and
Yeah,
a half.
yeah,
Yeah.
something like that.
So there's definitely ample parking for sure. Did you want to talk about the map?
I can, yeah. I mean, this is another one of the strongest things about this deal is the location of it. It's just a phenomenal location in terms of a lot of demand drivers, which are basically the reasons why people want to live in a particular location. So you have a combination here of the employers. There's a lot of large employers in the area. I think in just St. Louis County, within a 10, 15 minutes of this property, there's over 500,000 jobs at some very large employers. There's like three hospitals. Um, some of the top schools are within minutes of this property. Lots of shopping, uh, restaurants, activities to do. So, and access to the highways. There's two major highways that kind of cross at this location. So easy to get anywhere from this location as well. It's about 15 to 20 minutes from the downtown area. So if you're a Cardinal baseball fan like I am, that would be a huge deal because I'd love to be close to the Cardinals. I think
Yeah,
the next map
absolutely.
shows a few more of those demand drivers I was talking about with some of the shopping, the schools, and the schools we talked about. When we say the top schools, this no, we're not talking about just in the St. Louis area. We're talking about the top schools in the state of Missouri. So, and not just the top one or two, but probably the top three or four within just a few minutes of this. So there's and that kind of goes to shows you see that in the occupancy of this property that's been very strong and is pretty much helping to hold up the average of the St. Louis area because of such an area. And what Teresa mentioned before about how there's so many people at this property that has lived here for quite a number of years. So
Yeah, one of the things I noticed when I talked to the residents as we went into each of the units, as we all did, we toured the units or not toured them, but inspected them with our little handy dandy app. And what I found is the way I described it is the people who live here are before family and after family. So they're the young people who are. I had several that were nursing students that were, working and again going to school part time. I had several that were retired. These are units that are perfect for that because they're very, very neat, very easy to get to, in and out. Like Tim said, the parking is right there, so it's definitely very suited for those people who have not started their families yet or have already had them grown up. So when we think about, anytime you have an investment, you want to think about the risk and how are we mitigating the risk? And one of the ways that we do that is not only through our stark due diligence that we are very, very cautious about. I mean, there's a reason that we have not presented a property for any of 2025. It's because we've been looking for the right property that meets all of the requirements that we want it to have in order to make it a great investment for each of you and as well as ourselves. I mean, we want this to be an ongoing event that you invest with us and have great returns. And we truly believe that we can do that based on the fact that we are very, very cautious about what we look at. I know Tim has underwritten probably over 400 deals, napkin underwriting the back of the napkin. Then took maybe another 150, 200 deals that he actually put into the software program that he uses. Out of that, we've submitted LOIs on about 15 or 20 properties in the last 10 months. And then we were best and final, which top two or three properties. Our offers were accepted in about 9 or 10 deals. And finally, this one matched up. And we tell that story in order to help you understand that we are very disciplined in what we have chosen. And that's why we know that this property is super good. Tim's going to talk about his underwriting here in a minute. And as I said, it's very conservative. But just to give you a quick overview of what this slide is saying is that when we talk about the risk or the risk mitigation, the projected 5-year average occupancy. Now, these aren't our numbers. These are numbers that are for the market that we're in. They're projecting an occupancy of 94%. Well, guess what? This property lines up with that exactly. We've been 94, 95% over the last 5 years at this property. Like I said, it's good, solid, a good solid rental per month with it only being 1180. And for this area, it's outstanding. And in addition, on the right side, you'll see that the projection is a 2.3% annual rent growth. Again, this is what the market is projecting, and we're right in line with that. We're a little bit higher in the first year or two as we make our improvements, but then we fall right in line so that we're right at this number going forward in order to be sure that we are not over projecting what we can do with this property. Tim, you want to cover this as part of your underwriting?
Yeah, so it's very important. I mean, you see a lot of, if you look at a lot of these kind of deals, and people always talk about their projections, so they're usually talking about the upside potential, when you're talking about rates of return and that type of thing. But what we always want people to know is that we look at the downside as well, and we see what is your level of protection on this. And so we like to show this break even analysis that says, you look at the expenses and the revenue that we're projecting on what can happen. And the worst case scenario here would be that we could drop all the way down to a 66% occupancy and still be able to pay all the bills and not lose any of the capital that anybody invests in this deal. So that's like 35 residents out of this property that would leave at the same time, which is highly unlikely to happen, especially with this location where it's at, and then the history that it's had of having a very strong occupancy. So it just shows you that this is a very low risk investment. And of course, nothing is zero risk, but this shows you right here that at least we thought about that, and we can give you a good idea of how well your capital is going to be protected.
Yeah, and I think just to kind of compare it, this one is the average of 66%, and I think that's one of the things that really made us open our eyes wide on this deal, in addition to the location, of course. But my understanding is that most people, if they break even at a 78 to 80% occupancy, they would be happy with that. I mean, that would be okay. And here we are even lower, that we can still make it work at 66%. So that's pretty amazing, to be able to find a property that is going to get this kind of return for people in the long run, even in the worst case scenario. So this business plan implementation just talks about the general timeline that we would be on.